Good afternoon, everybody. I'm Stacy Scott, and I'm here with Graham Wickham, President and CEO of Wickham Financial and Insurance Services. And we're back this afternoon with our weekly wrap-up. Graham, what do you have for us today?
Yeah, thank you, Stacy. Really coming off spring break, at least for the families in this area, I was out a bit last week, but we really saw the continued advance of the Treasury yield. The yields moving up, anticipation of the Fed being more aggressive or hawkish, if you might, towards interest rates or raising interest rates to tamp down inflation, which caused some pressure on the markets. As last week we kind of recommended to our viewers and listeners, you might want to consider, taking some chips off the table, paying yourself a little bit on that big advance. But yeah, we saw the S&P down about 1%. We saw the Russell and the NASDAQ down about 3 to 4% last week. Some areas that we saw outperformance in traditionally we would. We saw healthcare up about 2.75%. Where we saw staples, consumer staples, areas where people would tend to hide out in, up just over 2%. One thing that I thought was interesting, even though there is question marks. Is there stagflation out there? You might hear that term, or you might hear, we're going to be moving into a possible recession. That's not a guarantee. It's just a possibility. Those are the rumors that are out there, some of the conversations that are going on. We still saw unemployment rates really drop. So we continue to have a very, very, very strong employment market where we're seeing unemployment rates really, really come down. The other thing, we really saw the consumer credit really surprised, up about $41.8 billion. That's the highest level since 2001. So we are seeing unemployment coming down, and consumer credit quality moving up. So that's very, very good from an economic picture. The one thing that we did see is, a lot of a hot topic out there is oil, crude oil, gas prices, that direct tax to consumer as we're moving into, probably one of the most heavily traveled time of the year, spring and summer. We really saw inventories step up. But at the same time, we're seeing some closings. We're seeing some pandemic shutdowns over in China. So again, some fear again is, what will that do to crude prices? And that's bringing them down a little bit last week as we move into the new week.
Okay. Well, Graham, is there any real direction in the investment markets right now?
I don't see a great direction. I think the market's kind of gyrating or cycling within itself, right? So you're seeing certain sectors like this consumer discretionary, or you might be seeing technology pulling back, where you might be seeing utilities or staples or healthcare moving up. Those tend to be more of the risk off trades, where the risk on trades are actually pulling back. So it seems to be just cycling within the market until the market can feel like it gets a good handle on how quick, how fast interest rates are going to be moving up, and will that push us into recession? And if we have lower demand, and higher inflation, that might be stagflation. So the market's just trying to digest all that. So I think right now it seems like the market's just in a pattern of digestion, and not really setting a big move up or down, even though we might be starting to lean towards maybe taking back some of those gains we've had over the last couple of weeks.
Okay, well, that's a lot for us to digest. I hope you have a very great week, viewers, and thank you for joining us today. Thank you, Graham, for this information, and we will look forward to seeing you all next Monday on our weekly wrap-up. Thank you.
Absolutely. Have a great Easter.